right, so we've been doing this segment. You actually haven't been here for this. This is going to be your first time doing it. Rapid fire.
No, we did it.
Did we?
Yeah, when you butchered it with, what's his name? With the rooftop guy.
Shoot, you're right.
No, it was with Cole. When you asked him about 2-stroke and 4-stroke.
Oh, that's right. That's right. Okay, so
hopefully this one goes smoother.
I'm going to do this one
Don't butcher me, please.
We just started doing this maybe 4 podcasts ago, but I like it. So this is going to set the tone of the interview.
Okay. Oh, Lord.
We're going to do overvalued, undervalued. Okay. So I'm going to hit you with like 6 things, and I just want to know if you think it's overvalued or undervalued.
Okay.
Got it?
Oh. Okay.
First thing.
All right.
California real estate.
Overvalued.
The American dream.
Ooh. Misunderstood. More than.
Short-term rentals.
I would say that's my wheelhouse. Depends on the market, but I would say there's some room to come down. So I'm going to say overvalued in some markets, but real estate is very market specific.
Long-term rentals.
Again, market specific. I would say, I think there's still, we're about to be in a correction. We are in a correction. So I'm going to say overvalued. Still room to come down.
Online courses.
Overvalued.
Putting 20% down on a home.
Undervalued.
Airbnb arbitrage.
Overvalued.
Okay, here we go. So I have been looking forward to this interview because I've been having some issues with Airbnbs.
Okay, I have them too. Let's talk about them.
And so I wanted to run some of the stuff by you because I definitely understand the difference between how something feels and then national data supporting it.
Right.
But I've had back-to-back Airbnbs now where, going in, photos look great, super host, okay. And then you get there and it's like, I was tricked.
Oh yeah, it's happened to me too.
And so, I think because it happened back to back, this is kind of where I went with it. First one, walked in, and the front yard was just a disaster. Grass was overgrown, paint on the house. Like driving up, the house did not look nice. It looked a little bit rough.
Yeah.
And then you got in, and it had like a nice enough renovation to it. But then like no toilet paper, no shampoo, no conditioner, no soap, stuff like that.
Yeah.
And I kind of had this realization that Airbnb is a hospitality industry. This is
100%.
a service-based industry. Mm-hmm. And it seems like so many people got in 21 because it kind of became a trend paired with an opportunity to make good revenue during that time. But these are people that are not service-based people.
Yes.
And so I've got to the point where I'm like, I'll go to a hotel now. Because it feels like the experience is better for me. It doesn't feel like an inconvenience. And I think the cost is competitive again. Am I the only one experiencing that? Is Airbnb as a whole going through a correction? Like, what is the reality or that's kind of happening on the streets?
Really, really great question. I'm glad that you asked it. So for me, the type of real estate that I invest for short-term rentals is not real estate where it's really a choice of, are my guests choosing me over a hotel? Like me, for example, I make the majority of my income from short-term rentals. I'm coming out to a podcast. I'm going to a conference. I'm staying in a hotel. I stayed at Chateau Marmont last night. I stayed at Hotel Chelsea in New York a few weeks ago. But if I'm going on a vacation with my family to a beach, to mountains, to a lake, national park, we're staying in a vacation rental. So I only invest in vacation rental real estate. And I think it's really important to separate the Airbnb industry, Airbnbs as a whole, from vacation rentals, because it has happened to me. And that's why I think there's still a lot of room to be successful if you master the hospitality piece of it. So we went on a month-long road trip 2 years ago, and during COVID, we got a big, huge motorhome, and we did it that way. And then we were like, man, it's too big. It's kind of stressing my husband out trying to drive it with a Jeep trailer. And so then we moved down to like a Sprinter van that had the bed in the back. Like we could stay there, but we were like, we'll just stay in Airbnbs. And it was like 2 back-to-back, actually, just like you. The first one we stayed in was in Pagosa Springs, Colorado. And they did not disclose that the girl who owned it actually lived there. and just moves out when you leave. So I was not expecting that. And I get there and I'm like, man, her stuff's everywhere. And then I'm worried about my kids, like watching them like a hawk. Like, are there, medications in this house? Or I just don't want them messing with, I don't want stuff in there. I want it to be like a hotel. So that sucked. And then the next one we went to was in Durango, Colorado. And this one, actually, we left our trip early and just went home. We were like, this isn't working anymore. Let's just go back to Florida and go to the beach. It was a boutique hotel that was rented out. I think it had been maybe like a 10-plex apartment building that they'd converted to Airbnbs. And it was just so loud. There were people coming in and out all night. It was really my kids sleep good. I sleep good, but waking up, everybody's like pounding around. I don't know what they were doing upstairs partying. And I'm like, man, this sucks. Like, we're not going to just keep spending money doing this. So I get it. And there were a lot of people who got in like the boom in 2020, 2021 that don't treat it like the hospitality business that it is. A lot of people who already have long-term investment portfolios would come to me and say, should I convert all of them to short-term? And I'm like, no. But if you stick to the right type of market, vacation markets where there really aren't hotels. So where I live down in 30A, 10,000 of us live there full time, but 10 million people come to vacation there every year. Every business is dependent on that tourism. There are very few hotels, if any. There might be one or two hotels. So our entire economy depends on that, and has forever. Like, my grandmother's been coming to that area and renting vacation rentals since the 30s. So I think if you stick to that type of market when you're A, investing, or B, staying in a vacation rental, the vacation rental industry in those types of markets is just so established that you're not going to run into that, oh, they live here and they moved out, or the hospitality isn't there.
Right. So we deal with this a lot, and it frustrates the crap out of me, where you'll see like a bad landlord, you'll see like a slumlord style.
Yeah.
And it puts such a bad, I think, taste in the overall public's mouth, and it kind of jades us who are real estate investors at times. Mm-hmm. And so I always kind of say, look, if you're a bad landlord, sell the asset and don't do this. Like, you have no business doing this. My question to you, and I want to be careful saying this because I don't want people to lose money, but do you think the Airbnb market needs to fully crash so that it kind of weeds out the people that should not be here, who are not doing it right, and giving the overall asset class a bad rep?
No. I think the market will correct itself without a full-blown crash, because honestly, what she just said about selection of the market was one of the most brilliant things I've heard with respect to the Airbnb play, right? You don't buy a house to do a short-term rental in an area that doesn't have something that attracts tourism, right? So you go for the lakes, you go for the beaches, you go for the areas that are attractive to vacation goers. You go to an Airbnb where you went in an area that's mostly businesses, not really driven by tourism or people coming in, you're not getting necessarily somebody who's going to take care of it as much. But
look, the one I went to the week before was Park City, Utah. It was a freaking ski trip.
Oh, yeah. Well,
no business for that thing to miss.
Okay, but that's anecdotal, right? So
true.
So just like with any decision, you never want to make decisions based on anecdotal evidence. You want to make decisions based on aggregate data.
Yeah. Do we know the data on what the breakdown is for Airbnbs that are in vacation areas and those that aren't? Like, what are tourist based and what are the ones I'm talking about?
So, I mean, not offhand, but I think AirDNA probably does have that. And I mean, I think that your story is actually a really good anecdote to illustrate there is still plenty of room to be successful as a short-term rental investor, because people like to say Park City, for example, it's saturated. Gatlinburg, the Smoky Mountains, where I own a bunch of them, saturated. You can't make money anymore. But there are so many of those people, the saturation people, causing it to be saturated, that are doing a bad job, that if you capitalize and do have a good hospitality business, which is not hard to do. I mean, if anybody listening has ever waited tables, you will be good at this. Right. It's the engineer types that have a hard time with this. Then you're going to be good. You're going to be okay. So there's plenty of room. Just because there are a lot of short-term rentals in a vacation market like that doesn't mean that they're being run well or really run at all. So there's plenty of room to do better. But I'm not surprised to hear you went to a big vacation town and had a bad short-term rental experience.
So here's my thought, and maybe you can correct this if it's right or wrong. But like with anything, the details matter, right? And so being Airbnb and being hospitality, are they paying attention to the details? For example, we went to Palm Springs and we stayed at Airbnb. And this was what, 4 years ago?
Yeah.
Ryan, how long ago did we go to Palm Springs? It was years ago.
This was when the state was locked down.
They put the Dr. Brommer's soap in the shower at this Airbnb. All organic oils, no parabens, none of that stuff. That was an attention to detail to put natural stuff in the shower that made me think, okay, this host actually cares about what it is that he's doing. Everything was well kept in the kitchen. The furniture was spot on. The unit was super clean. The attention to details actually matter. And so you touched on engineers being the ones that are having the hard time. Is it because they're so focused? And we have this, by the way, in our business too, right? Some of our partners are way more data-driven, and Mikey and I are a lot more experience-driven. How much of this is because they're just looking at, the P&L, and not looking at, okay, people are coming to spend their vacation time here. They need to have a good experience, even if it means my profit margin goes from 30 down to 27.
Right.
Yes, it's 100% that. So the engineer, and no offense to engineers, by the way, but
They're just not good investors.
you said it, not me.
Look, I love them for building stuff. They're just not
Yeah.
good investors. They have a hard time investing.
Yeah, they just think there's one right and only way to do things, and it's very, very data driven. And so a lot of times they're the ones that will choose the property that is cheaper but may not work the best. So for example, in a mountain market, you want cabins, and they'll say, well, a 4-bedroom cabin is this much, but a 4-bedroom brick ranch home is $200,000 cheaper. 4 bedrooms, a 4-bedroom. Let's go with the cheaper one, when really that one's not going to rent because it's not the aesthetic that the guests want. Same thing with the Dr. Bronner's. I'm a Dr. Bronner's peppermint girl myself, but it doesn't have to be. I think people have this idea that, oh, well, I don't have the time because I'm not going to go. I don't want to have to show up and lay my jacket down for them to walk across the puddle type of hospitality. It can all be systematized. The Dr. Bronner's can be systematized very easily. So it's just understanding that what you're doing is you're providing a service. You're providing a backdrop for people's vacations, which is one of the most important times in their lives, one of the most memorable ones anyway. And you can still systematize that, but you just can't penny pinch.
Here's my question to you. You asked me if I thought that the Airbnb market needs to go through a massive correction in order to level set. Do you think that the housing market needs to go through a correction or will go through a correction because these Airbnb operators underwrote their properties incorrectly, are mismanaging them, and that we're going to see a flood of units going onto the market at some point?
Well, I mean, we should have seen a massive correction everywhere when the Fed raised rates the way they did. That's the truth of it. The reason we didn't is because building in certain areas is very difficult, right? That should have put so much pain on owners that I think there should have been a force-off sale. For Airbnb, I think it has to correct. Personally, I think it has to correct hard. When I look at the amount of people that came in and the way they underwrote, which was basically non-existent, they overpaid. And they expected basically everything to continue the way it was with rent increase and appreciation, that I think for the person that went in and bought one that is doing this wrong and is not doing this as a business, I don't think it's good to have that just continue out. I think there needs to be a correction, especially when the user is so frustrated by what's going on, right? The biggest sell to me for Airbnb when it first launched was cheaper. I don't have to worry about, hundreds of other people at the hotel. This is sick, right? And then came the added fees, pulling the trash out, making the beds, right? The rug getting pulled and what you were actually getting. And now I'm like, gosh, a hotel sounds awesome.
Okay, so let me clarify the question. Do you see the Airbnb correction correlating to a correction in real estate? So all of the units, so Airbnb operators poorly managing it, they're not generating the income. Eventually, they would theoretically get to a point where they say, you know what, I'm not in the right business. I'm going to sell this and get out.
Well, the reason why I don't know if they're going to go hand in hand, look, if there was a flood or an off sale of Airbnb in one market, added supply is going to help the situation, considering they're undersupplied, right? But I think it's a different scenario because if you live in a home and you're sitting on your 3% 30-year fixed, you don't have to go anywhere, right? When you have an Airbnb and you're relying on revenue to pay your expenses and debt service, it's a different calculation, right? And then I wonder, and this might be a good question for you.
Yeah, I can speak to this.
Did people get into Airbnb thinking it was a passive investment and were shocked with the reality that it actually takes work? Are people tired now? Is their property distressed? I think there's a potential, multiple factors that are coming into play.
I can go on this for a good 30 minutes, so drink your coffee. So just to kind of preface what my experience is, I own the largest short-term rental or vacation rental specific brokerage or team. We're with EXP, so brokerage within a brokerage in the country. We have sold over $3.5 billion in vacation rental only real estate. In 2021, our highest year, we sold $1.2 billion in vacation rental real estate. So, and we've been doing it since before COVID. So I bought my first vacation rental in 2015. So I've seen pre-COVID, during COVID, post-COVID, we've helped over 5,000 people do this. And so I've seen the good, the bad, and the ugly. We've got offices in 20 markets across the country. They're all vacation markets with the exception of 2 that I call vacation-ish, so Scottsdale and Orlando. But here's what we've seen. We have been in a real estate correction this is going on the 4th calendar year. Now, why a lot of people don't realize this is because prices have not gone down a lot. They have in some areas, which I can get to in a minute. But in terms of number of homes sold, fewer homes have been sold in 2023 and 2024, and looking like 2025 also than any year in the last 35 years. So 2008, 2009, 10, they sold more houses than we did in the past 2 years. So the housing market is in the absolute toilet. Now, obviously you spoke to, we've got a lot of demand that we can't meet in terms of primary home buyers. Also, something that a lot of people don't realize is all real estate investments, 50% of all real estate investments, whether vacation rental, long-term rental, or otherwise, are sold within the first 2 years because people, I call them obsessors. So like my dad, at nighttime, he's super into collecting like vintage antique shotguns that have like the pretty engraving. And he gets online at night and he obsesses over that and looks at watches all the YouTubes and does all the things. Well, people get into this for a number of industries. People get obsessed with investing in silver or investing in real estate. So they do this and then they'll buy a vacation rental or they'll buy an apartment building or whatever the thing is. And then within the first 2 years, they're like, damn, I don't like this. This involves people and people are horrible. I don't want to deal with people. This is not what I want to do. I'm going to sell this. So 50% of all of them are sold. What we saw in 2021 was there was a lot of FOMO buying too. So
100%.
Yes, rates at 2%. People are like, man, I've always wanted a beach house and the rates are at 2%. I can kind of swing that payment if I don't rent it, but I'll just throw it on Airbnb because Airbnb was kind of, blowing up at the time too. So everybody bought one. People who had no business investing in real estate, people who have no business running a business, bought them, expecting them to just make money. I think my Chihuahua picked up a couple at that point. So they bought these things, and you also have to not just buy the right property. You have to manage it right. You have to finance it right, which is very important. So people got into it thinking it was just going to print money on its own, that it wasn't a business, that you don't have to listen to your guests and make some tweaks. If, for us, we call it getting upstream. There's a book about it, but my husband runs all of ours. If a guest mentions something 3 times or 3 different guests mention something 3 times, okay, it's time to get upstream of that so that it doesn't get mentioned again. Like, oh, I didn't realize the driveway was going to be steep. Well, we make sure we slap you in the face with that a bunch of times before you get here. So not running it like a business. And then everything, there were 1,000 people offering on every single property. It was a nightmare to be a listing agent. It was wonderful. I'm grateful for that time, but you had to make these spreadsheets with 100 different offers to present to your sellers of, okay, this I think the $200,000 cash over asking is probably going to win here. So people were having to make these crazy offers just to get stuff. And what they would do is they would scoot further and further away from the best places to buy. So they'd buy 45 minutes away from the attractions, which was fine with the 2021 vacationers. But now that things have stabilized, it's too far away. It doesn't rent. Those are the first people to sell.
Yeah.
So we've sold several properties 2 or 3 times now between 2020 and now, of people realizing, oh, this is a business. I don't want to have a business. I don't want to deal with people, or just any number of things. Or, for example, like yesterday, somebody caught one of my long-term rentals on fire. Not a huge deal. I've had an apartment building burned down 2 years ago, but
One of your buildings caught on fire?
yeah. Well, so this is the example for the type of thing why people end up selling properties, because a minor. This one yesterday.
Wait, I just want
was
to.
about fire.
Is this a hypothetical, or did it
No, this happened.
really?
No, this
okay.
my husband texted me this morning. We were texting this morning about it, and he's like, "This is why people don't stick with investing in real estate." So somebody had a smoker under a tarp. It's undetermined cause of the fire. It burnt up the backyard, part of the fence, and a little bit of the siding. So nobody was hurt, nothing major. Their renter's insurance isn't going to cover it because it's outside of the house, and it's going to be less than $5,000 in damages. So we're like, we're not going to mess with our insurance on this. We'll just take that hit and move on. That's the kind of thing that most people are going to just sell the house over. Like, I don't want to deal with this. That was a nightmare. That was a lot of stress. Because when you haven't dealt with 1,000 real estate investing things happening, like to us, that was no big deal. But to somebody who has one who's 6 months in, that's a huge deal. So I think all that to say, real estate investing is not for everybody. We are seeing corrections in certain markets, in certain vacation rental markets. So like 30A where I live, there's very few people who live there, very few people who are moving there. It's all second homes and vacation rentals, and things are on sale right now. So I bought one this week that asking price $1.2 million. I got it for $815 because there's just not a lot of buyers anymore, because it's a very discretionary spending market. So you can, if you're buying in vacation markets like that, where there's not primary homeowners that are buying the houses, you can really get things on sale right now. So I try to like smack my clients in the face with this too. They'll look at a property and say, oh, doesn't make sense. Numbers don't work at the asking price. I'm like, well, don't offer the asking price. Offer the number that works for you. It's going to take 10 offers, but you're going to find the people who are selling vacation properties right now are not people that want to be selling. They're people that need to sell. So you will find somebody who will deal with you, and you'll get those good deals right now.
Yeah, we're seeing that in our space too. Like Austin just had a massive correction on multifamily apartments. I think rents are down like 22% from the peak, which was like 2 years ago. It's because they flooded the market.
Yeah.
They allowed building to build. They put 50,000 units online. Do you know that?
Oof.
Yeah. The city said we're going to deregulate, spit these things up, and all of a sudden there's more supply than there are buyers and renters.
I think she touches on such an important point, though, that like we talk about all the time when we speak to investors that are like, oh, yeah, I'm interested in what you guys are doing, but I think I'm going to do my own thing. It's like, okay, if you have the time and you know how to look for what it is that you're looking for, you know how to underwrite the deal, and you're willing to commit the time needed in order to make it successful, you probably will do well. But so many of them underestimate the commitment and the time and the energy that it takes because, like you said, it is a business.
Yeah.
It is not a passive activity. And we've had investors that have passed on our deals in 2022.
Yeah,
That have come back around in our last offering. They're like, biggest mistake I ever made. I had no idea what I was getting into. This thing drove me freaking crazy. I just sold it. Here's the check. I don't ever want to deal with real estate again.
Yeah, and it's hard for us because we bring investors into our projects. So the balance between like telling somebody, hey, just so you know, it's a lot of work, and the fact that we raise money sometimes can feel like a conflict, or maybe that we're giving them bad advice because we ultimately want them to invest with us.
Right.
But like I'm at the point now, like if somebody's like, I want to invest in I want to buy a rental property, my first gut reaction is only do that if you're going to build a business, because one property is not going to do it for you.
Right. 5
properties is not going to do it for you. You have to build a portfolio. If you're going to go do that, then go for it. If not, don't waste your time.
Yeah.
But I find myself now, just because of what I do for a business, when somebody says that, I'm like, yeah, go for it. Call me in a couple years.
Yeah.
Yeah, it's hard to figure out. On regulation, because as we were talking about Texas and the fact that Texas deregulated and allowed developers to develop, and it evened out their housing market. For Airbnb, cities are not looking at Airbnb through the same lens they're looking at multifamily.
Yeah.
Right? We're seeing more regulation added onto Airbnb in cities, not taken away. So my question is, Knowing that regulation is a risk for Airbnb investors, how do you protect your portfolio when moving into a market that could change the whole game after you have bought and owned or bought and operated?
Great question. So market selection is almost more important than the property you buy itself. So when I first started selling vacation rentals, I lived in Nashville. Most of my business was in the Smoky Mountains in Tennessee, but we did have a Nashville office. And Nashville, actually the reason I bought my first property in the Smokies was because Nashville was already very anti-short-term rental, and we could not afford. We were scraping pennies out of the bottom of my purse to buy that first house. We couldn't afford to buy something and 2 or 3 years later be told, oh, you can't do this anymore. Just kidding. So we bought in the Smokies because that's an area that the regulations are so established. It's been a vacation rental area since the 60s. So all those battles were fought years ago. But I was also selling in Nashville where it was a new thing. And I don't like metro markets where there's a lot of industry outside of tourism, a lot of primary homeowners outside of, just vacation rentals, and metro markets for that reason, because nobody wants to live next door to a vacation rental. I live in a vacation market. I choose that. And I still don't really want to live next door to one. I'm trying to raise my kids. I don't want people in and out. So I get that. And I think that regulations are good, but that's why I don't invest in truly just metro markets that don't depend on tourism for the economy. I like to choose markets where people have been renting vacation rentals since before the internet existed. The only thing Airbnb did was cut out the property management piece because those guys were charging 40% back in the day, which is why I started self-managing in 2015, because we went to a property manager. They said, oh, 40% of your gross. And we're like, wait a minute. We need that. So all Airbnb did was kind of democratize it. So it's actually an asset class that you can cash flow now, vacation rentals. So anyway, in those vacation types of markets. So you choose a market that has historically been very friendly for decades and decades. It's less likely that you're going to have that problem of all of a sudden they're changing all the rules on you.
Has Airbnb management gotten better? Because I remember that. Like, I'd have friends that got in and it was like 30, 40%, which is psycho. Where is it now?
The average is 20 to 25%,
Which is still high.
Yeah, to me is still kind of psycho. So for my 8 properties that I owned last year, I bought 2 in the past 6 months that I'm not including. That's $250,000 I would have paid a property manager to manage my 8 rentals that one of our VAs can do as just part of his job. So it just doesn't make sense. I've got a lot better things to do with that.
So is that the answer is VAs? Because I always recommend that people do not self-manage properties. Like I have the belief that it's better to be a real estate investor than a landlord so that you can focus on growing your portfolio and, work on the business, not in the business. But 25% is compelling to force people in. What's the hack around that?
Yeah, so I've got a few answers to that. So for long-term rentals, all our long-term rentals, we've got 200 and something doors. They're all with property managers. Yeah, those are all with property managers. For vacation rentals, and a lot of people don't know this, so short-term rentals are the only asset class where you can utilize a cost segregation analysis to offset your W-2 income.
I knew that. Did you know that?
No.
Oh, you didn't know?
No.
Well,
I
you're
found
gonna
this
come
out.
see me now.
Yeah.
So what happens is we get the reason you want to self-manage short-term rentals is because it's really not that difficult. Yes, it is work. We've discussed that it is a hospitality business, but it's a hospitality business that you can run from your couch, from the pool, from the bar if you want. So it's still, better than digging ditches.
Oh, you're saying because you're putting in the 750 hours?
Yes.
Gotcha.
So with short-term rentals, also, if you're a high-income earner, and you are not a real estate professional, so if you have real estate professional status, and I'm going to try not to butcher this because I'm not a CPA, but typically you have to have real estate professional status if you're a high income earner, you really can't get real estate professional status because you have to prove that you are spending more time on real estate than your W-2 job, which you probably can't do. It's probably not going to happen. So with short-term rentals, it's the only asset class where you can buy them, do that cost segregation analysis, and be able to offset by several $100,000, usually, depending on the price of your property, your W-2 income. So you can lower your W-2 taxes by buying and self-managing at least the first year a short-term rental property.
So if I work at Amgen and have an Airbnb that I'm self-managing, I can use my depreciation loss
Yes.
to offset my Amgen salary.
Yes.
Dang. I knew that. I had somebody on, Rob, who he ran the Bigger Pockets podcast after
Yes, I
Brandon.
know Rob. He's a client of ours. I know him very well.
Yeah, he dropped that bomb on me, and I was like, nope.
Yep.
No, you're wrong.
No.
No way. Yeah,
he's right.
That's a crazy one. For anybody listening that doesn't understand how depreciation or accelerated depreciation works, will you give just a brief overview of that?
So in real estate, your asset will depreciate in the quality of the asset over time, right? Every year, more environmental issues come up, the wood gets chipped away, basically it degrades.
But does the value go down?
Over time. The value doesn't necessarily go down because real estate is a scarce asset. Even though there's a lot of it, especially in this country, it's still limited. It's finite in nature.
So real estate can appreciate, but you're able to depreciate it as well.
So two separate things. One, we're talking about value, and the other, we're talking about actual expense of owning something. So a piece of real estate will degrade over time, right? And that degradation requires you to continuously invest in order to maintain the property. That degradation has a schedule. So in our space, it's 29 and a half years. In residential, it's
37 and a half, I believe.
So
We're 27 and
Or
a half.
27.
every type of asset class has a different schedule,
I
right?
just want to point that out that I had to correct you.
See what I have to deal with? This is when he says have another kid. It's like I have one at the office.
I don't get to correct
He's an
him often.
experienced guy, though, right? Not a data guy.
No, he actually is.
Man.
I am actually, truth be told, I'm probably a blend.
Yeah, I just don't get to correct him often.
Yeah.
And like yesterday, I said something that was right, and he had to go, dang, I don't like saying this, but yeah, you're right.
I think the words were Mikey was right, which that also puts it back
Yeah,
into
so
my mouth
I
again.
just, everyone listening, I'm sorry that was just a petty move that I just had to highlight.
Yeah,
But
so
the
coming
door was
back
open.
to the question.
Bring us back.
So you can do cost segregation studies, which we do pretty much on every single one of our deals at this point in time, in order to take that 27
There it is.
and a half year schedule and condense it to 5 years. Or I think you can even do 10 years on a cost seg study. So do you do it? I always say, yeah. I think it's an absolute way to go. But you will tear through that depreciation allotment in a shorter time frame. And when you do that, that expense is no longer something you can account for. So the question is, what do you do at that point in time?
You have to find another one.
Exactly. Because once you go through the depreciation, your taxable income is going to skyrocket on you, right? And so you will have to be mindful. You're either selling assets and do 1031 exchanges to get into the next one, or you are going to have to continuously acquiring more assets in order to refresh your depreciation schedule to offset the increased taxable income that you get. And so that's the part where all of a sudden, like you said, you don't just do one and you really just you don't do five. It's a business and you got to keep going after it and after it and after it.
Well, yeah, and I think even like it goes beyond the depreciation side because like cash flow of one asset is not enough to set you up for financial freedom.
Right.
Right? Like in some rentals, it's like $300 a month, which is rad. Like any money coming in that you're not working for is great. But if you're trying to offset 80 grand a year, 200 grand a year, you're not doing that with one asset.
Well,
You need a lot of
and
them.
when your depreciation schedule expires, your cash flow goes down. Right? So even more
You're
reason that
you're just taxed on.
right.
Yeah.
So your net cash flow goes down as a result of it. So again, it's not a one and done thing. You got to keep looking and looking and looking.
Right. Okay, so for you are on both sides, multifamily and Airbnb.
Mm-hmm.
For us, we're multifamily and storage only. What would it take for like a diehard multifamily investor to want to jump into Airbnb or short-term rental?
Well, the thing about coming from the multifamily world over to the short-term rental world is that when you're looking, the spreadsheets work so much nicer on the multifamily side because the rent is the same no matter who owns it, no matter who manages it until those people move out. And that works really great in a spreadsheet. Short-term rentals are extremely subjective. Two people can own the exact same property next door to each other and just do slightly different management styles and have different incomes. So we can give you like a range of what it should possibly potentially do, but you really have to manage it well, which is we teach all of our clients who buy with us how to do this so that they don't screw it up. And some of them still do. But you have to manage it well. And you can have different incomes just by the smallest things, such as like, well, this person has a 3-night minimum night stay and this person has a 5-night. So the 3-night person is probably going to have a higher cash flow because they have less holes in their calendar. So lots of little nuances like that.
Are Airbnbs squeezing first-time buyers out of the market?
Oh, I love this question. So again, depends. This is the people's favorite thing to say to me on TikTok is you're taking away all the homes that for primary homeowners. Well, if first-time home buyers were about to buy $1 million property at the beach, then I'll be the first one to apologize. So it depends on the market. If you're going into Indianapolis and buying up 10 houses on a residential street, you absolutely are doing that. You are taking away the ability for primary home buyers who would be buying a starter home to do that, which again, that's why I also try to stick to vacation markets, because these are the areas where that's all 90% of the real estate traded is going to be a vacation rental or vacation home anyway, whether you buy it or not, where yes, there's always the argument of, well, the people who live and work there need to, but it's less so. So you're usually buying something that was already a vacation home or second home or vacation rental. So I think that in metro markets and suburban markets, I think it probably is contributing to that. And that's why I don't buy in those types of markets. The types of markets that I buy long-term rentals are different markets than the ones where I buy short-terms.
Right. Do you think regulation is what solves that?
I think so, yeah.
Thoughts?
I'm not a fan of that argument at all because I actually don't think that addresses the problem. I think the problem is regulation. We're not building enough. If there's more supply going into the market, you're gonna see prices go down as a result of it. But because we're just not building enough in this country, particularly in certain metropolitan markets, prices continue to escalate and it prices first-time home buyers out. And so the first-time home buyers, if their pool was this, and because prices go up, their pool now narrows down to this, they're all opting in for less quantity. And so it's just a basic economic.
Okay, so you're taking the approach of just deregulate, make it easier to build. And you're saying have some regulation that maybe gives a priority over first-time home buyer?
Yeah. And I mean, at this point in the market, we're in a real estate crash, even though the prices haven't really come down that much. So there are thousands of listings sitting on the market expiring. And
can you walk me through that?
Yeah.
Why? I understand comparing the amount of sales today versus, let's say, 2009 when we were in the last kind of dump. But without prices coming down, how do you qualify that as a crash?
I guess a crash in terms of the real estate market moving. So,
Maybe for like an agent and in the real estate agent industry, it feels like a crash because nothing's moving and people aren't making money, and then they're kind of...
Yes. Well, and what's going to have to happen is rates are going to have to come down. Like, no, they don't have to come down to 3%. Everybody's like, they're never going to do that again. They don't need to. But 83% of mortgages in the U.S. are 6% or under. So even just a primary home buyer, investor, whatever, if they've got a 4% mortgage, they're not going to buy right now and jump up to almost 7%. That's not doable. It's not feasible. Like, you can't even make a lateral move without doubling your payment. So the closer rates get to 6, I think the more buyers are going to jump back in the market, because the difference between now and 2008 was 2008 people didn't have money. There was no equity. Now people are choosing not to buy. They're not buying because they can't. They're choosing not to because the rates are too high, because they just basically quadrupled overnight. So I think we just have to get to like 6.25, and you're going to see a lot of both primary and investment buyers jumping back in.
You think that's what it is? 6.25 opens up the market?
I think 6 would do it, but I think the closer we get, like, I think rates have dropped.
Yeah, what are they right now?
I think they're at 6.7, and
So that's it, huh?
Yeah, we don't have that far to drop before the needle starts to move.
Our market is so interesting because that drop for us does, like, the price is, in our area in Thousand Oaks, a starter home, 1,700 square feet, 40 years old, $1.1 million. And it needs a full renovation. It's just interesting. Like, they just had a whole, like, economic outlook of our area. And they're basically saying that you need to make about $360,000 to afford the median home price here now. that job does not exist at scale here. And so what happens? Like, how do you square that? Do just the next generation go, I can't live here?
Do you think you can? Do you think your children will be able to afford living here? If things stay the same.
If my children go down the conventional path without my help, no.
Right. So what will they have to do?
I either have to teach them how to be very high income earners, or I'm going to need to help, or they're going to have to look for other places to live.
And I think the last one is the one that a lot of people are going to resort to. I think we're just going to have to see more mobility.
Yeah.
A lot of people are going to have to move to new areas in order to go into a community that they can actually afford.
Yeah.
Because remember, if you make the $400,000 a year in order to be able to afford the median home,
to afford the starter,
that's a lot of stress also to maintain that level of income, right?
Yeah, that's
like we know this in our business. Like sometimes years are great, sometimes years are a little bit more challenging, right? It ebbs and it flows, and so unless you have a guaranteed income, which is not that common nowadays, it's a lot of stress to actually, it's a big burden to put on your shoulders. And so a lot of people, I think, just from like a management standpoint, are going to say, you know what, I'd rather go in an area where 25% of my income goes to pay for my housing instead of 70% of my income in order to cover my housing.
Well, how do they even get a loan at that high? Won't even qualify, right? What are the top 5 cities in America What are the best top 5 cities in America to buy Airbnb vacation rentals for 2025?
Oh, goodness. What a question. Okay. Here are my top 5 favorites. I love the Smoky Mountains in Tennessee. That market has been so good to me. I would be a $50,000 a year salary worker if we had not bought that first one there. We've got 5 there. I also like the Panama City Beach, Florida area. It's right next door to me in 38. It is some of the cheapest real estate versus the prettiest water in the continental U.S. You can get a condo there, which people get so scared of condos with short-term rentals, but the condo buildings there exist specifically to be short-term rentals. I mean, you can get a good condo there for $300. Where else do I like? I also really like the hill country of Texas. So a lot of people aren't familiar with this one. I went to UT back in one of my biggest regrets is went to UT, living in Austin, bartending on 6th Street, and all of like my coworkers were buying these $70,000 East Austin houses that I totally could have afforded, that are now worth $1.5 million. So, I didn't know about real estate investing then. I just knew about tequila. So, which I don't drink anymore. So anyway, Texas Hill Country. I used to go there every weekend, and so do lots of Texans. So there's a lot of stuff there. There's the Texas wine country. There's all kinds of great swimming holes and rivers to float. Float the river in San Marcos and down in New Braunfels. So it's basically the whole area west of Austin and northwest of San Antonio. Again, tons of lakes, tons of rivers, really beautiful, very hilly, scenic.
So I got Tennessee, Florida, Texas.
Yeah. So, well, the reason that I like that one is because as Austin and San Antonio just continue to explode in growth, that market is already a great vacation market. But as those 2 feeder cities continue to just blow up, there'll just be more people going out there. So we've got Tennessee, Florida, Texas. Another area of Florida that I really like is the Sarasota, Bradenton area. It's got that vacation vibe, but also there is other industry there. So you get a little bit of everything. What is that? Is that 4?
That's 4. I need one more.
That's 4. We need one more. Where else?
Nowhere in the north, in like the cold states.
So I would love
Coeur d'Alene. Anything Coeur d'Alene?
That's a good market. It's a very expensive market.
I'm always burning Idaho. Gosh.
Yeah, Coeur d'Alene could be a good one. I don't know if I would put it in my top 5. You know where I'm going to put, and this is going to be really controversial for anybody who's into short-term rentals who's listening to this, is Orlando. So Orlando got super saturated just before COVID and during COVID, but I live 5 hours from there. So we take our kids to Disney World 4 or 5 times a year. And there's 4 of us now, and we were talking about earlier, maybe we're talking about having another kid, or so once you get 5 people, there are only 4 on-property Disney resorts that offer, more than just 2 beds. So, if we bring my mom, we get cousins involved, it's got to be a vacation rental. So there is, and every time I go to Disney World, I am so just shocked at the amount of people there every single day, every single park, all kinds of people. Like, how are there this many people that are coming? I think it's like 54 million a year go there. So yes, it got super saturated. Yes, it got really tough for a lot of people, but now there's that crash did happen in Orlando. A lot of people got in over their heads, overspent on theming and amenities. A lot of that has been sold off and is sitting on market for a long time. I think there's a lot of opportunity if you buy right and if you manage right in Orlando right now, because that tourism's not going anywhere, and there's only 4 Disney resorts that you can really sleep more than 4 people in your room.
Yeah, I'm going to have that problem in a little bit. Actually, as you're saying that, I'm like, dang, maybe Airbnb is back on board for me, because I have little ones. So we can pull a hotel room right now. But if they get bigger, I'm a family of 6.
They will get bigger.
When they get bigger. I said if, when. Okay, so would you rather own 10 properties with debt or 2 all cash?
10 with debt.
Why? Are you crazy? Why would you put debt on a property?
That was a rhetorical question, just so you know.
Yeah. So for me, if I would rather put the debt on the property, let the renters or the tenants, whether it's short-term or long-term, pay that debt down than paying all of that price of that property out of my pocket, and leverage to cash flow more properties where people other than myself are paying that mortgage.
Can I ask a follow-up question?
Go ahead.
Okay. Yes, debt. How much debt?
That's a great question.
It is a good question.
I'm at the point in my investing career where we're looking at just kind of like, we can go put more debt on things and create more work for ourselves, or we can pay some things off and create the same amount of cash flow for less debt. So that contradicted what I just said. But if you're just starting, I'm a big fan of just putting down that 20%. There's some things you can do in vacation rentals that you can get a vacation home loan for 10% down, which we did do when we started, and you have to use the property for 2 weeks out of the year, but it's half the down payment. There is a 15% down conventional loan option for investment if you can't meet that 2 weeks. So those are some two great options. So at the beginning of my career, I wanted as much debt as I could get while still cash flowing. But now that we've got so many, it's like, do I really want more work other than just having to, buy for the cost segregation benefits every year?
What's the fastest way from zero to financially free for a real estate investor in today's market?
So for me, what worked for me and what I think continues to work is starting with vacation rentals. So you're getting into learning to be a real estate investor. You're owning the house. You're also getting into, if you want to go the Cody Sanchez route of being a business owner, you're learning both sides of that. So you're learning how to run a hospitality business and also how to be a real estate investor. So if you do it right, really, if you do anything right, you'll be successful. But if you do it right and you don't get going a little too fast, I think a lot of people make the mistake of going too fast and thinking that real estate is get rich quick. It's still going to be slow, but I think buying a few vacation rentals is really the greatest place and fastest way to get there. And once you have, I would say, get to about 3, the cash flow coming in, it's a lot easier to then go buy long-term rentals if you want to do that, because you don't notice they're cheaper. So you don't notice that down payment going out the door quite as much as you do on a bigger vacation rental style property.
If you have to go back to zero, how would you do it?
If I had to go back to zero?
Yeah, you're back to zero. You don't own anything. No storage, no multifamily.
I think I would have to go down the route that she's suggesting, just because prices are so high and they're so hard to, how much money are the multifamily projects that you're looking at now? Unless you're, trying to go for the duplex, quadplex play. But in our market, we'd be priced out of that if you're starting from zero.
Oh, yeah.
I don't think you could start from zero in a market like LA without bringing in outside capital.
Yeah, I agree. So I guess my question is,
I would bring in outside capital.
so you would syndicate is
Yeah,
how
I
you would go from zero to 100.
If I was starting from zero, day one, I would go to my friends, go to my family, procure capital, go out and do the deal, take a piece of the deal, harvest that cash, go out and do the next one, less investor capital, more of my own, and then watch, rinse, repeat that process until I got to the point where I built something up.
What asset class?
I'm in LA.
I don't know. You still living in LA if we didn't have this business?
If I'm in LA, I'm probably going after ED1 multifamily.
Okay. So you're
Affordable
doing
housing.
development.
Yeah, I go after affordable. I'd probably try to repurpose like a fourplex and try to build a little bit on there. But it's a tough
Bro,
question.
you're bouncing.
You're asking
You're
me.
bouncing
you're
all over the
asking me
place.
zero from an economic standpoint, but not zero from a knowledge standpoint.
Oh, that's fair. Okay, that's fair.
Right?
Yeah, that's fair. You know a lot.
Yeah. So I have the ability to do it. I just don't have the money to do it.
Okay. Would that change if you didn't have the knowledge?
Yeah,
You're not
of
doing an
course.
ED1
I would
development.
not do ED1.
Single
I
family,
would go down the
Airbnb.
path of SFRs, single family residences, and convert to vacation rentals. But question for you though.
Okay.
First one, do you do it local so that you're close to
such
the property?
Such a great question. So you can't always live in the best place to invest, but you do want to invest in the place where you have a competitive edge, which is knowledge. So my advice would not be, don't Google best places to invest in vacation rentals. You're going to get one list had Detroit, Memphis, like places that are not going to work. So just because they're cheap. I have recently had an experience with what happens when you buy cheap properties just because they're cheap. And I will get to that in a minute if you want to. So you can't always live in the best place to invest, but where you know. So where do you know? Well, was there somewhere you went as a child, maybe with your parents, where you stayed in a vacation rental and not a hotel? So for me, I grew up in Mississippi, going to the Florida Panhandle every summer. We went to Gatlinburg a couple of times. And so I already knew from a tourist standpoint what people do, what they're coming to do, where they're going, where they want to be. So choose a market that you know, that you understand a little bit, because if you just go off of like lists published on the internet, you're gonna have a hard time. You got to know where in the market and why. And how do you know that? Well, you've been a tourist there before.
I like that. Yeah, I mean, you live in California. Like what you just said, it's tough. I mean, we haven't done a deal. Like, what's a small deal for us now? 25, 30 million bucks?
At least.
It's a small deal. It's like, that sounds like a mountain compared to like when we first started. Yeah, I actually like the idea of investing in outside of your market. You just need to know what's going on, because in some markets, one block is the difference between a good investment and bad.
Yeah.
Right? How... You're married, 2 kids, 4 and 6,
Yep.
business owner.
Yep.
How do you balance all of that? How do you balance being a wife, a mom, and running a business?
We do the best we can. So we operate under I would call it a family business model. So I was the first one to leave my job. I was working in what I thought was my dream job in the marketing side of the music business in Nashville. My husband was, and he still is, but I'll explain it in a minute, a classic rock DJ on Sirius XM. He was full-time when we started. Now he just does it on the weekends. He gave up the full-time piece of it, I would say about 5 years ago, but he's like, I can't quit doing it. It's because it's so fun. Yeah. I mean, who wouldn't want to be a DJ on your favorite channel? Like, that's awesome. So we operate from family business, and the way we balance things is we both wake up at the butt crack of dawn at 4 o'clock in the morning. Sometimes he's up at 3:30 on different floors of the house, by the way, too. So I don't want him coming and talking to me early in the morning. I'm trying to get work done. So he gets up, he does a little bit of work. He runs marathons, so he's out the door to run. I get up, I just hit as much work as I can between the hours of 4 and 5:45 because the kids wake up at 6. I do what we call the morning shift with the kids, get them all ready to go to school. He comes back from running, showers, gets them to school, and then I either hit the gym or get to work. But that big chunk in the morning of everybody else is asleep, so nobody's calling me needing anything. No, none of my agents are going to be having a problem at 4 o'clock in the morning. There's not going to be any closings blowing up at that time, so I can just get done all of the planning and thought work done, and then any meetings or things that have to be scheduled, podcast recordings, things like that, can happen between the hours of 8 and about 1 o'clock. I'm kind of useless after lunch. I'm a great worker in the morning, but after lunch, you kind of lose me. So we are both finished working by 2 o'clock. Sometimes we go get the kids together from school, like a couple of dorks. They're going to be embarrassed of us one of these days. And then we're just doing kid stuff all the rest of the day. So we're going together to T-ball or piano. My kids are in so many things. But we want to make sure we don't force them, but they do have to be in at least one sport and one art, whether it's theater or piano or whatever. We're both ex-touring musicians, so and I was a college athlete, so both of those I think are very important for kids growing up in terms of just learning life lessons. But we just, honestly, I wish I could say we had this like great system but we just do the best we can to be able to spend as much time as we can with the kids, and every decision that we make in the business is based on that.
Yeah, that's good.
You asked her at the beginning about the American dream, and she said it was misunderstood. What you just said is a good description.
Yeah. Right? I would agree. I would say I think we're rediscovering that now. I think. But that's something like, we talk about that. We don't just talk about that. I feel like we're tweaking frequently for my wife and I on what's working, what's not. And sometimes we're in a groove, and then that doesn't last, and we have to, shift again.
It's really hard.
It is hard.
Yeah.
Yeah, especially as the kids are getting older. Like, you nailed it with sports. Like, we're not even like a big sports family. Like, my kids they play volleyball, and it's like actually kind of mellow. But like Tawny, who works for us, her daughter's in like
cheer.
Elite level cheer, and they're gone every weekend, and there's practice every night. That's tough.
Yeah.
Avery, thank you so much. Are you guys selling real estate nationwide or just in Florida?
Nationwide, 20 different markets.
Okay, anybody wants to get a hold of you, where are they finding you?
So you can find us, our website's probably easiest. Company's called The Short Term Shop. So theshorttermshop.com, Instagram at The Short Term Shop, or if you want me specifically, on Instagram at the Avery Carl.
And if anybody wants like help with Airbnbs, do you guys offer that as well? Do you do any investing consulting or anything like that?
We do. We do have a mentorship program. So we teach all of our clients who buy with us how to manage their short-term rentals for free. That's just part of our value add as a real estate agent. But for those who are maybe buying in a market that we don't operate in, or just want a true mentorship, we do have an option called Short Term Shop Plus, and you can find that at stsplus.com.
Thank you so much. What a pleasure.
Thanks for having me.